Good morning, good morning, good morning, everyone. Welcome to our weekly session where we learn how the market is structured. We're going to be trading ES when the futures market. So let's go ahead and get started. We're going to have a little shorter class today. I have to run some errands. Let me go ahead and share my screen. How's everyone doing? Good morning, Ty. Let's see. Alrighty, so we're just going to go through our routine. I hope everyone went over their fundamental analysis and, we go over Bloomberg or, Investopedia, whatever it is, just so that you can get a little bit of insight into the market. Then we take a look at you can use EconoDay, Forex Factory, whatever it is, just to see what data releases are happening today. So it is Wednesday, May the 21st. Looks like we don't have anything too major going on today. We're looking for any high impact data releases, which are indicated by this red folder for the US currency. Alrighty. Petroleum status, nothing too major. How's everyone doing today? Good morning, Miss Charlotte. Okay. So let's see. I am feeling great, doing great, just been really busy. Let's see what's going on. Oh, Top Step invited me back on. So I'll be there next Wednesday streaming and kind of going over our strategy. Nothing too new. Let's see. We will have, everyone's been asking, yes, we will have a boot camp this summer sometime. I'm getting it organized for everyone. So we'll definitely do that. I do love our boot camps because we have a lot more time to get in and out of the markets together in live time. So, thank you guys. Thank you guys. Alrighty, so I'm gonna drop. Also, did you guys see the book that I dropped in the Telegram? So let's see here. Okay, so if you guys are readers, I did drop a link for just a little. I'm in another group that always drops our really good business books. So trading price action trends, you guys, if y'all want to take a look at that, that is in the Telegram group. So you have that information as well. Let's see. Nothing new, nothing new. Alrighty, so let me drop our link here in the chat just in case. Okay, here we go. Alrighty, so hold on. Let's try it again. There we go. Okay. Already, how to deal with trading boredom. Has anyone gotten bored yet in trading? Not yet. I do like a break here and there. It helps me to get, a break from the charts. Sometimes we just need it. We just need it. So, and it helps us to see patterns better when we come back. Alrighty, so how to deal with trading boredom. Trading, Ty says she gets bored when she's not winning. Yes, no, that's definitely a time that we would love a break, being bored. I don't know, bored, maybe frustrated during those times, but Let's see here. So, and then this is from, of course, Baby Pips. Let me drop the link here in case you guys want to look at it later. Great resource. You know, they have a lot of information on this site. Alrighty, so trading, whether it's currency or stocks or options, is usually associated with money and risk, things that people find very exciting. The truth, however, is that there is so much work behind the scenes that a lot of newbies quit at the onset of boredom. Those who are starting out might be surprised to find that plenty of hours have to be put in when it comes to analyzing economic data, studying the charts, hunting for good setups, and journaling trades. And when there are days when markets are stuck in a range, there's no good catalyst to trades. There might even be times when huge drawdowns can bring so much stress and suck all the excitement out of trading. That's what Ty was talking about. Yeah. Now that I can see the excitement not being there, definitely. All right. So during these instances, the idea that Forex trading is all work and no play might feel boring and unmotivating. So, how can we overcome this? So, idle hands are the devil's playground, some say. But did you know that boarding or lack of trading action may actually be good for Forex trading? So, when your mind is being blasted with all sorts of visual, audio, and emotional noise, it's hard to hear what the markets are saying. Distractions may keep you from being focused on recognizing chart patterns, or they can negatively affect your ability to process market information and react timely to changing market conditions. So while the absence of stimuli may seem dull to you, it gives you an opportunity to reset and put your mind at ease. And when your mind is not distracted, you can become more in tune with the markets. But the problem is that most Forex traders can't stand dull moments. If you've ever been bored while trading, then you also know the feeling of frustration that comes with it. Okay, there we go. Alrighty, so you want to feel productive. You want to look for trading related things to do. I personally know some traders who are like this, us here, right? When they get bored, they try to fill the void by over trading and forcing trades. Yes, from that frustration. Some end up even raising their risk tolerance just to get their thrills. How many people have over leveraged just trying to get into the market because the market isn't moving? And you're like, okay, so I can't go in here with just one contract because the market's not moving. It's only giving me like 3 or 4 points, but I definitely need to meet my goals. So let me go ahead and go in this baby with 3 contracts, even though that's totally over leveraging, going right against your risk management, just so that you can get in the market and then boom. Sometimes they win, but in many cases, their account balances take unnecessary hits. Ty, Ty says, me with my boxing gloves on and get knocked out. Girl, oh, we've all been there. You got to duck it. You know? All right, so boarding can actually be a good thing if handled properly. The absence of stimuli allows you to put yourself in a serene, peaceful state where you can truly focus on your trading objectives. So, this should be your goal, as good trading decisions usually come from calm and collected mind. Remind yourself that it's okay to take breaks, gather your thoughts, realign your trading goals, and focus on more constructive efforts. Boredom isn't necessarily a bad thing. The feeling of boredom is just your mind and body telling you that you have everything in place and it's time for you to be patient and let things come to you. Right? How do you guys feel about that? Good morning, Maureen. I do. Let's come up with a couple of ideas that we could do together moving forward whenever we kind of feel bored. Instead of us forcing a trade, let's go ahead and think of some other things we can do when the market isn't moving, but we still want to be in a trading mindset. And remember, we don't have to trade every day. We don't have to trade at all, but we want to. But if there's not good market conditions, sometimes we could still get that boost, by doing other things. So come on, let's brainstorm. What about when the market's not moving? That's when we watch that hour-long trading, video that we bookmark on YouTube, or something that we've been wanting to look at but never found the time. What about a book? Our trading books, we could read a couple passages from that, or listen to a podcast. We could back test. We could get into the market back testing, and especially using that replay feature that we learned last week. You could also, what's it called? Paper trade. And sometimes, while we are going through those movements and paper trading, we get that boost as well, because we just want to be in the market. We just want to be trading. So we could be learning and other trading training. Exactly. Listen to personal development. Exactly. It doesn't have to necessarily be a trading related book. It could be something else, but just something that just helps us and gives us something else to do with these little fingers, instead of just pressing that button. I talk with my hands all the time. My son, he hates that. So I make sure to move my fingers just a little extra whenever he's around, just to, make him feel great. Yep. Put yourself in a better, Ty says, put yourself in a better vibration by listening to music and sing and dance. We also have to remember to take movement breaks. So a lot of times I get stuck at this computer and I'm just, flowing, reading emails on the charts, posting this, talking to this student, making sure they have that, analyzing this, making a packet there. And I could be literally just sitting here in my zone, music on in the back, or my podcast playing or something while I'm doing that. And then I forget that I have not gotten out of this chair in like an hour. So even if we just have to just move around, just get it together, just kind of break it up a little bit. That always helps. Held hostage in a trade. And yeah. So sometimes we were just like, I remember someone asked me, they were just like, so you're just going to sit here and watch that? I'm like, yeah. And it's like, no, why am I doing that? I already have my take profit parameters, already have my stop loss parameters. I can do other things. But because we don't trust the markets, and that the markets are going to, they might move past our stop loss, or we might get wicked out. That's why we can set alerts so that, we can take our phone, do other things, and we'll be alerted if price hits our stop loss, if price hits our TP, if price hits a certain point that we want to add on to our trade. We can set those things up and walk away, and do other things and come back knowing that we have a plan. I know it's hard sometimes because it is exciting, but the more we're in the market, the more we are risking. You have risk when you're in the market. When you're out of the market, you don't have any risk because you're not in a trade. Or, sometimes we are looking at the market too much, adding on too many positions. And if we would have just put our initial trade idea in and walked away and let that thing happen and trust our analysis, we would have been better off. So little fine line, but we're always growing. We're always being, becoming better traders. But also having our routine. So remember, let's see here. Let me see. Let me bring up our trading routine. We used to have, oh yeah. Oh, here it goes. So, we have our trading checklist. Let me see if I can pull it over. Oh, sure can't. But anyways, remember we said, we have certain things that we do to get into a good mindset, to get into alignment with the market so that we're in a good headspace, so that we're not rushing into a trade, that we're really intentional in what we're doing. We have clear goals, clear risk management. So we definitely do our pre-work before we hop into the market. And that definitely helps us to be in a calm state and make rational decisions. All right, so we've done everything. We've checked our fundamental news. Well, before, hope you guys did that. Forex Factory, we did our trading psychology. We have our trade risk parameters, our trading plan, what our goals are for today. Let's see if I know I had a trading plan on here for us to look at as an example. Where is it? But anyways, you have your trading plan. You already know before you take a single trade what you are risking, what your goals are, and all that great stuff. Alrighty, so again, we're going to have a short class today. We're just going to really quickly go through what's been going on in the markets. We'll talk about our trade that we set up last week, what happened, and how we could have managed that trade before, of course, it went into the opposite direction. Remember, when we're trading, we don't want to be right. If we get stopped out because we're following market structure, that just tells us, remember we said what doesn't happen is just as important as what does. So if your trade does not go into profit, and then instead, if you're in a sell and it, buys, that means that we are no longer selling. This price is no longer retracing, and we have a new price point. Take that loss, get back into the market. We cannot hesitate, because a lot of times we'll hesitate, even though we've set up certain areas that we know, okay, if price breaks above this area, we need to be in a buy. But we'll wait so long until after maybe that buy makes a new high and it's retracing for us to say let's get in, and then our entry point is all crazy and we're in drawdown. So you don't hesitate. As soon as you see the market doing or not doing what you anticipated it to do, get out and get on the right side of the market. Alrighty, so okay, let's see. Okay. Anyways. Strategy disclaimer. Alrighty. Anywho, let's take a look at, yes. You guys ready to get in the markets? Does anyone have anything in particular that they'd like to go over, something that happened in the market? Or we'll take a look at gold today, and we'll take a look at US 30, which is Dow, which is YM. Well, really quickly, we're not going to go through our whole top-down analysis with your charting steps. We're just going to head on straight to the 15-minute and take a look at what the market is, doing. So, but I do want to just quickly talk about what happened last week. Okay, so let's go to the 15-minute. We can see that a lot clearer. Okay. So last week during class, we set up this cell here. We had, actually, let's do this. Let's go to 5:15 at what? time are we? Okay, so this is a trade that we had set up. Look at our pivotal zone. So let's just watch to see what happens and why this was set up. We have our shifts here. So we had our price kind of marked up. We had a 4 hour. This was our R8, which was this on our 4 hours, still our 15-minute. So we had a lot of support. A lot of resistance in this area. Price was making lower lows. So we were looking to take this sell here. Of course, it's set up over here. So let's just see how this plays out and what we were looking for. Okay, we had that huge spike. Okay, now you see the pivot level shifts. So remember we had our R8 up here. What time is this? 10 a.m. This is 9:45. Okay, so we see what happened here. We had price buying. It came over here to our R8. Then, we were overbought. We were expecting price to come back down here into this support level. However, huge wicks, huge momentum. Price end up coming up into this buy kind of area, coming back into this. I think we were activated right here at 9:15. Price did come into, we were in profit at 9:45. So we were a couple points in profit here, about 8 points in profit. And then what happened? We were oversold. Price kind of wicked us out. We have this cross up here. Price is still making higher highs and higher lows. So that would have been another indication when on the lower time frames that price kind of went back into our entry point that we could have just, secured a couple points in profit. We do see here, this was our 1 hour low, this kind of line here. And we have price just, we have price just kind of touching this area and coming back down. If we do a fib from this high to this low, price came up here and touched our 61.8 level. It's also at the R8. So still, if I was in this trade, I'm still thinking, okay, still looking for a sell. It's at this area. Price is making lower lows and lower highs. We had a little bit of retracement. Price just came up to this 61.8 level, but it was just a wick. We didn't have a candle break above. Our pivot levels are telling us that we are at a resistance zone. So we had a break, kind of a retest, and we have these areas marked out. So we have our R8 up here at 59.40, kind of 59.38 kind of area. And we're just looking for price to continue in that sell. We did have news that day. Alrighty, let's see what happened. And again, we're just looking at the 15-minute time frame. Okay, selling candle. All right, and now this is when price kind of came back in here. We could see that price started forming some support, so still making higher highs. This wick came up here. If you weren't already in this trade or secured your profits, you would have been out 10 points. Okay, once price made this higher high here and we got this pivotal level shift, that would have been our indication that we need to be looking for some buys. So as soon as you get this pivotal level shift, this is when you have a chance to now out 10 points. Well, so unfortunate, but we move on. Now we're looking for longs. What would we have done? As soon as we seen price coming up here, we had some buying momentum. We would have looked at these candlesticks to give us a clue into what's happening. buy candle here, nice green candle. Price is still unable to push kind of below this level, below this wick here. All of our moving averages are pointing up, going higher. As soon as we got that pivotal level shift, boom, let's just say we got into the market, we would have been looking to come for price to come to our R8, that's our TP1, or I'm sorry, our R7, and then eventually to our R8. Again, just kind of risking 10 points. This is about 13, so whatever your parameters are, we don't really run a risk too much then, 10, 15 points. If price retraces that much, that might be telling us that we are on the, we're on the wrong side of the market. Okay. So out 10 points, we see what happened there. Now we notice that price, no retracement, price is blowing past this 61.8 fib level. We have a pivotal level shift, meaning that price is now making higher highs. It's blown past kind of these levels, these previous highs here. And now now we have a new target point. Once price would have broken up above kind of, this high, this wick, this was a pivotal level before. I think it was like the -3 or +3. And that would have been a break in our signal to get out of the market. Of course, ideally, would have at 5902, 5900. Let's see here. Okay. And it's just blowing past. It's coming up to our take profit. So now, if we had our take profit right up here at 5937.5 and price came up to 5936.75, be honest, guys, if you were watching this trade, would you have gotten out of that trade and just closed in profit even though it technically didn't hit your TP? Or would you have waited and got those last little 2 points? Ties out. Good. I'm going to tell you guys a horror story. I know it's not Halloween, but I was looking to do, I think it was in Top Step, about to pass a challenge early on. So last year, I don't know, the beginning, September, October, one of those times around that time. And my price came, I think it was $100 near where I needed to like pass the challenge. So to take profit, if you had to make, $3,000 or whatever, it came $100 near there. Instead of me getting out of that trade and just figuring out those extra $100 and getting back in, I let that trade pull back $500. I was so frustrated at that point. Had to, get back in the market. I was just this close, but because I wanted to be so precise and it didn't hit that point, I let that trade. Imagine that the trade was all the way up here at 59.37 and you let that baby come all the way down here to 59.22. And then, of course, I would have gotten out in this situation. This is where I would have gotten out of the trade. And then it would have went back into my direction. Happens all the time, happens all the time when you just want to be precise. I wanted to be so right. And it hit my exact target point, because I just wanted to be out of the market. I just wanted to be done. I didn't want to get into another trade, even though it was just for 100 points. So don't be the reason that you're not successful. Don't stand in your way, because that wasn't the market's fault. My analysis was right on, on point. There was nothing else that was the reasoning for that trade or me, letting all that money stay on the table, letting it go into pullback, but just my own thoughts, beliefs, what I was doing. So don't stand in your own way. Alrighty. So price eventually did come up here. It did hit that take profit point. And now we have a new R. It hit the new R8 on the 15-minute was the R8 on the 4-hour. So do you guys see why I say we start at the 4-hour and get those levels? Because once we had a pivotal shift, our R8 on the 15-minute was the R8 on the 4-hour. We could, we already knew that. We already had that marked up before those pivot levels even shift. So if we didn't even have our pivot levels shifting like that, as soon as price broke above this area here, and we were no longer making lower lows and instead making higher highs, we already had a price point. And I'm saying if we didn't see the pivot level shift on the 15-minute and we were just looking at structure, we already had a point from the 4-hour. So that's why I'm saying those higher time frames kind of give you more insight into the market before the lower time frames do. Okay, so now we are at our R8. We are overbought. This would have been a area that I would have been like, okay, now here's the reversal. Now we're oversold. Now we're near the R8. But we would have to be very careful because we do see that we had our 1020 cross and price is just making higher highs. We have our MAs nice and spread apart here. We're in a nice buy trend. We are at a level, a potential level of resistance. But when price is in this kind of area here, and we are looking to see if we're going to have a pullback maybe to this P4 level, we would have to put our fibs kind of to see a potential pullback zone. But when we're in an area like this, we really want to make sure before we commit to a counter trend trade that the market is telling us that it's ready to do that. So we have to look at our structure. This area right here, 59.25, this is kind of where we saw the last kind of low. So high, let's see. It's like a high, low, high up here, kind of support right here in this level. You see these 1, 2, 3, 4 candles, 4 15-minute candles, the seller is really not pushing below this level. So price would really, gray on gray is crazy. Let's see, it's like a black line. We would need price to break kind of below this level here to confirm. Some people, would look at 59.36, kind of this area as a low, but price can just come and kind of touch this area and do the exact same thing, just box around right here and continue to make a higher high. So I would take your confirmed previous low. Now, if price breaks below 29.24, that would tell us that, hold on, we're making lower lows now. Let me get back into the market. Let me get into this counter trend trade. It's confirmed. So until price, until price breaks below this level, we're still looking for buys. So this is where I say box up kind of your area. If you're a visual person, we have this high right here from this candlestick, and we have this low. We want to see price either break out of this level to the upside so we can get back into these buys. Then if it comes back down here, if we do get into a counter trend trade before it hits this level, let's see, It's just about 7 points. So if you're a scalper, that's crucial. You would want to catch those points. But if you are getting in a pre-counter trend trade, so it's not confirmed, you're not going in with your full lot size, and you're definitely not risking 10 or 20 points. 10 to 20 points. Your counter trend trades, tight stops, because you're going against the trend of the market. So, alrighty, let's see. All right, so it's broken below that level, but you see, okay. So it's broken below this level. It's touched this 20 EMA. Now, this is a tricky area because, again, price still, we had a little touch here. But remember, we're talking about candle breaks. We want a candlestick below this area, not just a little wick, just touching our 20 EMA, which we know that sometimes that's kind of buy area. So we're still in an iffy area here on our 15-minute. This is where we might be getting frustrated because this has been going on, 145, 215, 230, and we're kind of just still in this area. No big movement here. What are we looking for, y'all? Do you guys know, if you were in the market right now, what are you waiting for the market? What would the market need to do to confirm you getting in a trade, either to a buy or a sell? If you were in, I don't like this purple. Let's make it a little lighter. A lot of colors on our chart. And all right. You see how come we keep all these labels and things here for 15-minute shift, 515, new R8. Why was that there? Okay, anyways. Guess that came later. A break. Okay, so Maureen says to break the current high or low. Yep, officially. Yep. Charlotte says a close above or below. Exactly. So right now, when we kind of zoom out here, we can see price still not making that lower low, not making a higher high. So let's see what this pair, and again, remember, y'all, okay, it's 3:15. The futures markets close at around 4. So this is like a time that this would have been our best trade. This was 35 points. If you would have gotten in, you would have, lost 10 points, but your next trade, you made 35 points. So you're 25 points in profit. We don't need to catch every move at 12:45. These afternoon trades, even though you could catch a little something, if you have already gotten a huge trade like this, just get out the market. You made 35, 25 points. You're good. You could get tricked up in this kind of movement here, not really reading the market clearly. And then you could give back some of your points before you get back into a trade in your level. Going in your direction. So out 10, up 35. What if you give back 10, again, messing around with this. So now you're down to, up what, 25 to 15 points. Then, you might get in a trade for another 10 points. So now you're up 35 points. So all this trading that you did over here just to get back, maybe you made an extra, after you lost, an extra 10 points. So now you're up 45 points. For all of this headache and in and out in these extra trades, we could have just taken this 35 points, been in profit, been done, not trading in the afternoon. This is lunchtime. Those big giant investors, the market makers, and they say that when they are at lunch and, everyone's just, not trading, around 11 to 1 or 2, that's when the algos take over. So the algorithmic trading, they turn on those machines, and that's what's kind of trading and putting it in their positions during that time. So you do get a lot of wiki movement. Just a theory. We don't know. Alrighty, so let's see. What time is it? Oh, we're good. Okay, so let's move our box over a little bit. Still not making a higher high, still just bouncing around. So you see how we could have gotten confused here, like, oh my gosh, it's made a lower low. So now we're in this sell at 315, but then at 330, boom, green candle comes in, we're buying, and now we're back, up here for a buy. Price is making lower lows. So this is really, I mean, I guess if you were a range trader, there is some good movement here as far as, you could have taken this sell. And then of course, on the lower time frames, they probably would have given you some indication. Okay, we're coming back up here for this buy. Now we're taking this low. Now we're coming up here for this buy. But who would want to trade markets like that? If we're not making lower lows and higher highs, or higher highs and lower lows, maybe if you're, range trading on the 5-minute time frame and just catching, your goal is just 5 or 6 points, cool. Maybe that might be, your jam, if that's the type of trader you are. But if you're looking for 10 and 20 points and just to let that baby ride, and you want to be in a trending market, yep, exactly, Ty, it's frustrating. Definitely frustrating. So we don't want to be frustrated. So when you see stuff like this, that's just your signal to not be in the market. That's your signal to, oh, dang, as soon as you see something like that, it's like, oh, I got a course that I need to be, doing, learning on, or I need to read something. I'm going to wait. Let me set an alarm. Let me set an alert, right here. If price breaks below this area again, and let me set an alert a little bit above this area, and let me do something else that's beneficial, instead of me trying to trade this and potentially giving the market back, the monies that I just made. So don't look at it as something. You remember how we had to train our brains, and we did that for a long time, about our stop losses, and how when price hit our stop loss, it wasn't a negative thing, but instead a positive thing, because we're protecting our accounts. We're the protector of our accounts. Price hit our stop loss. We didn't let it run out. This stop loss is here for a reason. And we had to do all that logical thinking, and train our brains, rewire our thought patterns, so that stop losses didn't make us, when price hit our stop loss, that didn't make us angry, that didn't trigger revenge trading or frustration, but instead gratitude. So when you see something like this, you're not like, oh, I really need to get into a trade. It's like, whew, thank God I don't even need to trade right now. I had something that I needed to learn anyway. You know what? Let me just back test. So let's start rewiring. If you guys are going to work on rewiring your brain when we see the market ranging like this, if you're going to work on that with me, put some 3s in the chat. If that's going to be our goal for the next couple of weeks here, to rewire our brains and get out of the market when we're not supposed to be in the market, when the market's not giving us that signal, throw some 3s in the chat so we can all hold each other accountable, so we can remind ourselves, so that, even if you see me throwing a trade idea in the chat, if you see this kind of, movement here, you're like, hold on, y'all. I don't think so. Let's go ahead and read our books or do something like this. Remember, we're not supposed to be in the market at this time. So we help each other. We hold each other accountable. We're going to make sure that we are not trading just to trade. How y'all feel about that? Okay, so what time is it? It is 8:45. Alrighty, let's just look through this really quickly, and then we're going to set up our trades for the day, and then I'll let you guys go. Oh my goodness, everyone's just walking all throughout the neighborhood all day. I see the same people every day. I'm so nosy. Have like 3 big windows in front of me, so I can see all the movement going on. I need to get out there with them. Alrighty. So again, market just doing this. Okay, it's already 9:30 at night. So All right, now we have a pivotal level shift, but it's still just kind of just bouncing around here. Okay, now it's going to break, but mind you, it's 4 a.m. in the morning. So I say London open, but it's really Euro. Asian close, Euro open, because London open doesn't happen until what, 6 a.m. or I don't know. Baby pips, though, if you guys ever want to, sorry, side note, if you guys ever want to if you're ever off with the market hours, this is such a good tool. So the Forex market time converter, of course, we know you guys just got to look at the times. We know that the pre-market open for New York is a little bit different. So we have a little bit of different times as far as if you count the New York session opening at 9:30 or 8, whatever. You guys don't pay too much attention to it, but this just helps you to see when the Sydney's open or in closing, Tokyo's opening and closing, the London session, and things like that. So it definitely helps us to see when certain markets are closing. That creates volatility sometimes when we have an overlap of sessions and things like that. So let me drop this in the chat. Okay. All right. Oh, so this is probably why we're probably going to get a shift soon. I had that there. Yep. And that's what happened. We had a new shift here on the R8. So when we have a shift, remember we were trying to see if price was going to break below this area to give us a confirmation of a retracement, pull back there. It did not do that. It just bounced around this area, broke above here. Remember when price broke above here, we didn't get a pivot level shift just yet. We were oversold, overbought on our RSI, but we know market structure. So as soon as we got that, break above, we had these huge candles and we saw price and, new candlestick kind of, breaking above this area. We already knew that the pivots were going to shift there because pivots are based on market structure, support and resistance. So, we're just going over here how we use our pivot levels in our RSI and market structure in live time to kind of get in and out of our trades here. So we had our new pivot level shift. Boom, price hit this R8. Now we're having some selling momentum. It kind of pulled back here. Hit this R8, making lower lows, lower highs. And this is a totally new day. And now what's the market doing? We're not, it pulled back here, kind of touched this R2, S1 kind of level, still didn't break this lower low that we were looking at from before. So that's why I'd love for us to keep kind of our labels on our charts, because this was a major level on Thursday as support. And we see on Friday, the market used that same level as support. So that was, again, our confirmation. This was just a pullback. Price is making higher highs, and we get another pivotal level shift. And we're just continuing to, move forward. So you take your RSI. Did you guys notice how sometimes our RSI was showing overbought, but price continued to buy? Or, it was selling and we were oversold and we continued to sell. So these aren't your RSI isn't buying and a selling indicator. It's just telling you what's going on in the market at that time as far as price momentum. Okay. All righty, good. So y'all got that. Okay, so let's go to real time. Let's go ahead and set up our trades today, right now. We had all that extra information. Cool. The market came back down, came all the way down here. We had a lot going on since last Wednesday. We had a lot going on. Huge movement in the charts. I need you guys to start telling me what you need to work on. If you know, sometimes we don't know, so that we can focus on those things and make sure, is it market structure? Is it your candlestick patterns? Is it, marking up your charts? What areas, because there's only a couple of us that come on, every morning for these classes, 10, 20 people. Well, not 20. Not yet. But we have to, this is good. We're a smaller group, so we can really just focus on those things. I don't have to have like a big class where I'm just generally speaking. We can be like, okay, Ty wants to work on, our pivot levels. Charlotte, she really wants to get into how we set up our trades on the 3-minute time frames. So you guys think of those things, maybe drop them in the chat, maybe the week, the night before or over the course of the week. When you think of things and things come up, be like, hey, Wednesday's class, can we go over this? And I can start compiling, some notes there, and we can start getting that information and getting us all the information that we need to be successful for free. Alrighty. Okay, so we are on the 15-minute time frame. This is how, okay, I guess I can, now that we've went over that information, I can take away these lines here, and we can put, actually some new lines, move these lines to where they are supposed to be now. Alrighty, so our 4-hour R8 is right here. And this is our 520 class, just so that we can, when we're back testing and going over what happened in class next week, we can know where our pivot levels. Okay. Where our pivot levels we're at. So the R8 on the 4 hours here at 59.40. We have our 15-minute R8 at 59.57. Wasn't a shift. All right, and now we have our S0 down here at 59.18. So price has pushed down to this level. It's made a kind of, not really a higher high, because look, this was kind of our most recent kind of high here at 59.32. It just kind of touched this area, and now it's down back here by our S0. So again, we are at a place, let's look back. We are at a place where we're like, what's going to go on now? Because technically we are in a downtrend. Everyone see, if you guys can see why we're in a downtrend, throw some 2s in the chat. Can you see clearly? Because if you don't, I'm just going to show you how to see that clearer. We'll go and switch to our line charts. We do our little our little lines. Ooh. Oh, you guys are here. Okay, J-Boy and Lux Trader. I thought I was talking to just Charlotte and Ty the whole time. Okay, cool. Great. So we see how we have, price going in a downtrend. We had our short-term EMA cross here telling us that, we had it a couple, bouncing around here, but right up here on the 19th, we had our 1020 cross, and price, we had another cross here, another cross where it was just kind of bouncing around in that area. But on the higher time frames, we are still making lower lows and lower highs. There you go. Oh, hey, Kelly. Okay. And then we have our larger EMAs, our 10, our 50, and our 200 crossing at this point. So giving a lot of selling momentum here on the 15-minute time frame. But now we are at an area of interest. Why do I say that? Because before, price was unable to break below this 5,900 level. Before that, that 5,900 level was a major level of interest where price just broke above that area, even though we were looking for sells. So remember when I said about those round numbers, psychological numbers, 5,900, 5,800, 57, even in those 50-point price points. So we are being cautious here. All right, y'all, set up your trades now. What are we looking for? We're going to set up a box. We want to see what price does. It needs to break out of this level, huge level, kind of huge area here. But why are we saying that? Because look, if we do our fibs from this low to this high, price has come right up here to this 50, 61.8. Let me make it clear here. 50, 61.8 level. And so this is, if we were looking at market structure, price came down here to our buying area. It pulled back to our 50, 61.8 level. And so we're looking for price to buy up to maybe this R7. However, price does not appear to do, it's touched this area. It doesn't look like it wants to make higher highs right now. So we have to look at this area and see what price needs to do in order for us to get into a trade. Okay. So price would need to make lower lows and come out of here, out of this level. We'll most likely get a pivotal level shift and see price coming down to this is our 800 EMA. We know that, we use these EMAs for support and resistance. So if we get a breakout of here, we have a potential TP area down here at our 58.80 kind of level. And again, we'll go to the other time frames. We're just using market structure just for these zones and using our EMAs to help us. If price breaks below that level. If price breaks above this level, we already have our areas, our R8 or R7. Remember, if you have two contracts on and price hits 59, 52, close to that area, take at least one contract off if you want to keep a runner on. Remember, price does not always tend to go to the ultimate levels sometimes. So take that with a grain of salt. But if price breaks above this price is on above this high, so above 59.33, kind of that area, then that's going to confirm our buy. If you were a preemptive trader and kind of just getting into the market, before it gives you that confirmation, because price has come to this S0 level, this would be, a potential buy area and getting into the market at this zone. So yes, this is the 15-minute time frame. This is the area. So let's see. Let's put up our strategy here. This is kind of where we use, and this is just a quick little steps, 4 steps. There's more that goes kind of into it, but there's our strategy right there and how we're just using. And then this is our chart key. So what do we use everything that's on our chart for? So what are we using our moving averages for? Our pivots, our RSI, all that good stuff. But yes, we're on the 15-minute time frame and we're setting up our intraday trades. So right now, if we were following this trade, we would be in for a buy. So along from this level, we're taking it up to the R8. We're just going to be risking 10 points. If price kind of breaks below this level, we definitely don't want to be in this trade. Okay, but let's now go to the 5-minute time frame and see if that's in alignment. Okay, so the 5-minute time frame, there, the pivot level is there. Can you guys see this clearly? Let me just, hold on. I know I have a lot of colors on my chart, y'all. Current interval and above. Alrighty, so let's go to the 5-minute. Okay, so the 5 minute time frame, our R7 and our R8 kind of at the 59.32, 59.38 levels. So what does that mean? That means that when price reaches this area, we might have a little pullback before it continues to shoot up to potentially our R8, R7 levels on the 15-minute time frame. But this is very interesting because now look at what our pivot levels are telling us on the 5 minute. It's telling us oh, our 15 our 5 minute pivot levels are showing us that hey, we might have some selling momentum and price actually might be selling and not pulling back into those buys. Right now, I like to have our trades kind of set up, but this time is so tricky because of the New York Open. So that's why I say, like, you guys let the New York Open happen at 9:45, kind of see, what that movement did. Did it break above this level? Or if you see like a nice strong trend, just be careful. But this is telling me that, maybe I might not want to get into this trade. Remember, we were waiting for it to break out of this box, right? Make a higher high or a higher low. So this is just us, looking to see if we were taking a trade when we're not supposed to be, before we get that confirmation, what would we be looking at? So we would have been looking at, price to buy up to this area on the 15-minute time frame, but look at what the 5 minute is telling us. It's telling us that price may come down here. We're seeing that, price already came to the R7. It's made a lower low, a lower high, a lower low, a lower high. So this may not be what we're looking at, especially for the New York. This may be a trade that happens this buy when price comes, all the way down here for, after the New York Open. So we take that with a grain of salt. That might be the overall trend. We have to see what price does. Right now on the lower time frames, it's looking like we might have a sell down to this area. Y'all know I don't care about being right. So that's why I post these kind of areas and what I'm looking for. I don't know. What the heck is ES about to do? That's a good, can you please, that's a good way. I'm sorry. When I don't see what the market is going to do, I look at the time. Boom, not a good time for me to be in the market, but I'm just going to, set up my trade, kind of analyze and see what the market does. If I do take a trade, it's in my demo. Until I see, sometimes at 9:35, I might see, oh, it broke below this. Okay, let me get in because it's giving me that confirmation. If not, just wait for that 9:45 candle to come in to help with that. Okay, JV says, can you please touch a bit on the moving averages and how they contribute in reading the market? Ooh, of course. So moving averages, again, so we're coming from the Forex market and we've transitioned over to futures. So with that, we don't really have the DOM or the depth of market to kind of tell us where orders are in the market, where they're being placed. So we use market structure, and a lot of these indicators help us to spot support and resistance. So our moving averages, let me make this a little bigger. Good question. Thank you. Let's see if you can see it over here. All righty. So our moving averages are 800 is this purple EMA. Let's see if we can find it on the chart. It's up here on our 5 minute. Then we have the 200 EMA. That's more of our long-term, brain freeze. Y'all help me out. Long-term trend, kind of in moving average there. We're using EMAs, not the SMAs. 200, the 50 here is the green. Then we have our 20 here is orange and our 10 is our blue. So they help us, they do a couple different things. So they can help us stay on the right side of the market. So for instance, Where do we have this? They help us to support a couple. They help us to identify a couple different things. So they help us with support and resistance, identifying where the market may have support and resistance. It also helps us to identify trend in the market. So for instance, if a price is below like these longer term EMAs, that helps us to identify that we're in a sell trend. If price is above the EMAs, let's see if we kind of over here, like in this area, then that helps us to identify that, hey, we're in an uptrend. These EMAs can also give us, they can be used as a strategy within itself. One of the first strategies that I learned was using the 10 and 20 cross. So when we have like a cross here, let's see if I want to get in here. I have a couple different things. So the 10, this blue line crossed this 20, that gave us a buy signal if you just use your short-term EMA crosses in conjunction with our RSI, that gave us a buy in conjunction with our nice, huge green candle that engulfed the previous price movement and made higher high. But that would have been a buy signal. And you can use that to stay into the market until you see a cross. As you can see, price is above all of these EMAs using, at one point, this 10 EMA as support. So price is kind of touching this EMA, kind of riding on it, using it as support, staying above it. But now we can see that when we have a cross, such as right here, where now the 20 is crossing over the 10, boom, we are now out. We would have been out of that trade, out of that buy, and looking for sells. As we can see, a little bit of, sideways movement there, but then price ended up kind of making, a little higher highs. We got a cross here again. I use the crosses, we're on the 5-minute. I use the cross on the 15. But they help us for support and resistance as well. So kind of using, for instance, if we see price coming below this 200 EMA, that's kind of telling us that we're in a long-term selling position. Price can kind of touch these EMAs and use it as resistance. I'm kind of trying to look for one here. Oh, here we go. Price cross below all of these EMAs, giving us some good selling momentum. And then it came back up here and, was unable to cross above like this 200. That's resistance there. So it all depends. It can be used as support, like it's being used here. And you'll notice on different time frames, on the higher time frames, we really want to look at 250 EMA to help us to identify the trend. And on the lower time frames, we can look at the lower time frames. And it just really helps us before you kind of incorporate pivots, incorporate your RSI, really before you kind of learn your candlestick formations and those patterns there, to train you to stay on the right side of the market and get in and out. So that's kind of how we use that. Does it make sense? Do you have some more questions? Oh, you're welcome. You are most welcome. If you are in the Telegram chat, I'll drop something with some more information on these EMAs if you want to read up, or I'll drop like a video from someone. Let me write that down so we can get some more moving average information. You are welcome. Thanks for joining us and asking those questions. Very important. Okay, so back to our time. Let's go ahead and look at what time is it? Okay, let's go ahead and look at gold, and let's look at YM, the Dow, to see if that's going to give us a little insight into, what's really going on. Right now, though, here we go. We have a cross. It's at a crazy time, but we had a cross. We had a buy cross up at this level here. If you We would have gotten that kind of confirmation once, we would have seen these engulfing candles. But you learn, you take it, you have to do a step at a time. So anyways, we would have gotten in with our knowledge before we would have seen this cross, but this cross is confirmation, for this buy that happened here. And then of course, delayed, these indicators are lagging indicators. They're taking information from the past. So finally, once we would have noticed that price was coming into the sell, we got this indication, this cross here. So we're selling, we're making higher high. We had a high, we had a lower low, a lower high, a lower low, a lower high. Looks like we're about to break below this area. And then, whoa. Okay, so potential take profit zone. If we break below this sell, let's look at the 1 minute. So 59.03. Remember, we were looking for on the 15-minute at that buy, but now we came down to the shorter time frames, and it looks like we're going to pull back a little bit, sell a little bit before we continue into that buy, possibly. So that's why I always say we look at the higher time frame, so we could look at the 15-minute to set up our trade. But remember, then we go down to the 5-minute, make sure it's in alignment, because we're going to see things when we're on the higher time frame. Remember, we're zoomed out. When you zoom in, you can kind of see those price movements and what's going on a little clearer. Remember, people that are trading on the 4-hour, they're, holding their, sometimes swing traders are using that time frame. So, and they have a huge stop loss and things like that. Alrighty, so how would we set this up? 10 points. Coming down here for 13. See what our 1 minute is telling us. 1 minute. Let's see if we get a pivot level shift here. Yep, we sure did. Y'all saw that? All right. Came back up, but we got that pivot level shift. Let's see if we see what time. All right. So we have some take profit areas. Is it going to shift again? Did y'all see what was that 59? Oh, here we go. 59.10. TP1, 59.08. Take profit 2. Let's see if we can perfect our entry. Let's see if price is going to come back up a little bit before, getting in. What? Nope, it didn't. It's just pushing lower, pushing lower. So we have a couple different take profit areas, 59.11, 59.08, 59.03, according to our pivotal zones. Our pivotal zones help us with identifying key areas in the market based on market structure and support and resistance as well. So again, if you had, there's going to be a couple different take profit areas. If we're continuing in this, sell trend, these are the levels that we can look at for price potentially going to. Let's see what that 15-minute was telling us. Okay, still in our box, Hasn't broken out of this kind of area here. But of course, then now we see if it does, we have it all set up. How do you guys feel about this trade? Do you understand what we just did and why we did it? And if you don't, just say, go over whatever. I'm going to hop on over to our other pairs. Alrighty. Okay, you guys are getting it. Okay, so we kind of have this set up. I'm going to come down here to the 5 minutes so we can see it a little bit clearer, move kind of this stuff out the way. Let's look at our other pairs here. Alrighty, the Dow. 15-minute on the Dow. I love the Dow. It's so clear. Its price movement is so nice. It's kind of like gold as well. It's not a beginner, it's not a beginner pair, I would say, because you do have to risk a little bit more, and how, again, how we're counting or how we're calculating our take profits and our price fluctuations are a little different compared to ES, totally different compared to gold. So know your pair. But let's take a look at what this is telling us. So the R8 is up here for for YM. All right, into the thing again. All right, and then our S0 is right down here. But look at our RSI. Our RSI is giving us major selling vibes here. Oversold, pushing down. This is an indication that we may see these pivotal levels shift because price is making lower lows. Let's also see, so if we were in this trade, seems like price is selling 42,340. We'd be looking to see to take it down to 42,250, down to this area. So let's see here. So we map it out. Remember, I always tell you guys now for, the Dow, different range here as far as how many points you want to risk. We don't want to risk more than 100 points ever. I say 50 to 60, but right now, look at this time frame. I just want to use these candles for my stop loss. Oh, what am I doing? Oh, thank you. Thank you, American Trucker. I love a good trucker. Thank you. Well, welcome. We do this class every Wednesday, free for everyone. Everyone is welcome. We have our our Telegram chat there. If you have any questions or you have a trade that you would like some, more insight on, you drop it in the chat, and we look at market structure and a little simple strategy to help us get in and out of the market. So we do this every Wednesday, 8 a.m. Eastern, and we talk all day in the chat. Thank you. I'll be on Top Step TV next week, Wednesday in the afternoon, kind of going over this strategy and my progress as well. So I hope to see you all there. Alrighty, and we're going to do the same thing. So as we can see, all right, cool. ES is in profit here. You guys, remember when it gets to 59.11, be very careful. We might see all of these lines, they're take profit points, but they're also support areas, which means that price may have the potential to pull back and start buying at those areas. So very careful, and that's why I marked them out. And their take profit or their support areas on different time frames. So this is the 5 minute. We've zoomed in, or this is the 15. This is the 5 minute. We kind of zoomed in here as well. So, you take it with a grain of salt. If you're a person that just wants to hold on to your trade and just add, onto positions as you see it breaking that structure until it gets to this overall take profit area. Remember, this overall take profit area is 58.98, but 5,900 is a strong zone. So caution. So again, if we wanted to walk away, that's when we, set our alerts. So we're not staring at this baby all day. And again, you can set alerts here at these different pivotal zones as well. Okay, so back to the Dow. Looks like it's near the low of this pivotal area on the 5 minute. Let's see what the 1 minute is telling us. Okay, the 1 minute is telling us that it kind of giving us some buying momentum on our RSI. It's kind of pushing up, but not really. Said it was buying from this candle here at 42,353. Looks like a little divergence there, which makes sense as to why we were at the S0, but we were completely overbought coming down. So great. As we can see, a small kind of We'll do a take profit right here. If you're looking at the 1 minute at 42,285, kind of in that zone. 42, yep, 42, 87, 85, kind of that area. If you are on the smaller time frames, kind of just scalping there. All right. And then you guys know when price comes to these levels, now we're going to look to see, is it going to continue to push lower? Do we still have selling momentum? Or is this when we're going to have a pullback for that buy? So those 15-minute candles, especially if you see like flat bottoms there, really, really helpful with kind of helping us to determine the next steps that pair is wanting to do at that price zone. Okay. All right. We didn't really have too much. We didn't have any news this morning. So I guess the market's kind of just behaving. Now, gold traders, where's Florence? I need to hit up Florence. She is so good. All righty. So we had set up a trade on last week. Not going to go over it. Honestly, I can't even remember. But obviously we had a take profit zone and it looks like price came back to that zone. So that's what's up. Okay. So 15-minute. Oh, okay, cool. It touched our fib zone, kind of hit our take profit, came back. Oh, okay. Here we go. We were looking, same thing. We were looking for it to pull back. It did not hit this, pull back to the 61.8 zone. Went into profit a little bit, broke out. We lost those 10 points. Boom. Price did the same exact thing, made a higher high. Then came back into our 61.8 level like clockwork. All right. Finally, officially touched that take profit area and has been making higher highs ever since. Gold is one of those, especially now. Okay, so look at our 4 hour. Our 4 hour on gold. Ooh. We're oversold. We're overbought. We had this 2 a.m. candle, kind of a doji there. We have this nice engulfing candle. We have 36 minutes, so the 10 a.m. We'll see how this new 4 hour candle opens and closes to give us an indication. If we're going to look like the 4 hour, we have new price points. Looks like it's coming and heading straight up here to 3,400, 3,440, kind of this area. So we'll mark this as our new take profit zone for this pair for, the next week or so. Remember, these things don't necessarily have to happen within the next week or day or anything like that. Sometimes it takes its time. All right, so our take profit zone for 520 at this area here. Okay, now let's go down to the 1 hour. I have to do a nice quick top-down analysis. Alrighty, so it looks like, price is making a higher high. It's unable to push below these lows, so we're not really looking for any pullbacks just now, but we are waiting for price to kind of break above this level. ES hit TP1, TP2, take profit 1, take profit 2, hit those levels. Alrighty, so for gold, let's see, we want it to break above 32.23. We have our support here at the 32 kind of 90 area here. Okay, that's in the 1 hour time frame. Let's see here on the 15-minute. And I know I'm going a little fast, but after you get into the flow and kind of know exactly what you're looking for and what you need to mark up, this is how I do it. So look for, what the market is doing, what I expect it to do. And if it doesn't do that, what it has the potential to do. So if it doesn't break into that sell and it said buys, I have all those kind of areas plotted out. We don't want to be right. We just want to take a good trade. So, a lot of times we get those educators or whatever that's just showing us, okay, we're just taking these cells. Kenyan American Trader says hit those like buttons. Oh, thank you so much. That does help our channel. So definitely hit those hit those subscribe buttons. I'm going to start placing alerts on the live so that you guys just know what's coming here and where to go every week. But yeah, a lot of those educators kind of just teach us sells. All right. We're looking for sells. This is what we're looking for. These are the TP. These are the take profit areas. But then when it doesn't sell, we don't know what to do. So that's why I like to mark up those areas. And I don't want to think about it while I'm trading. So if my trade doesn't go in the right position, I don't want to be all frantic, like, oh, it didn't go into my sell. What am I looking for now? What's going on? And trying to analyze at that point when I'm already frustrated. We shouldn't be frustrated if our TP hits, but we're humans. While I'm already frustrated and trying to get those points and plot out, what type of trade I should get into next. All that's already figured out for us. We already have to analyze so much information. If we want to take out as much thinking as we can before we get into the market. Charlotte says, do we enter on the 1 minute? After I plot out my, my bigger areas and what I'm looking for, I can use the 1 minute to get into the market. Let's see here. Let's try to do it with gold. Alrighty. So we kind of have where we have our support. We have, where we have our resistance. If price breaks above that, we're in buys. Right now, price has kind of just been ranging, even though it's been buying. Huge ranges here, huge engulfing candles. It's kind of come up to our R8, pull back a little bit. Now, this is when we would have known, okay, we would have had our most recent low kind of marked off. Price made a lower low. It made a lower high, though, because, again, we're near the R8. And then it came down here to our S2, which is our support level. And it's just pulling from, we use our indicators, we use our pivot levels 2 minutes before market open to help us spot those zones. But we also want to use our, naked charts and our eyes too to spot where are they getting that? Where are the pivot levels getting this information? So why are they saying this is support? We pull back and we can look here. Okay, this is why. We had a lot of support here. Sellers were unable to move the market lower at this price level. Alrighty, so up. All right, look at the Dow. It came into profit. Now look what it's trying to do. We're in our stop loss. Let's see if it's going to touch this. It did touch that EMA, and now it's buying. Perfect for us to see in real time. So now it's hit our stop loss. We're out 35 points on that. Now what do we have? What is the market telling us to do? We'll wait for a new 5-minute candle to give us the signal. See, okay, is it going to start, making higher highs and buying up to this level? Or is it just touching this zone, wiping out those stop losses and going to continue, in the area that we had marked off, which we had a pivot level shift. So now we have some more areas. So we'll see. Again, didn't we have this box? Remember we had this kind of boxed out here. So we'll take a look at that. Went into profit a couple points. Market, New York Open happened, started to buy. So we were in profit 26 points. So of course, once you're in profit, 20, once you go into profit a couple points, especially at this time frame, hopefully, if anyone was in this trade in their demos, remember I said this is not the best time to trade. We hopefully would have secured a couple points, at least 10 points once it goes into profit, so that wasn't a total loss there. And again, we just risked 35 points. If it was, we're going to wait for that 15-minute candle just to give us some more insight into what's going on. Then we can get back in the trade. What were we doing? Gold. Alrighty, so we have this doji candle here with gold. Looks like, alrighty, let's see here. Oh, dang. Look what the market does. Comes right up here and hits the stop loss area. Well, it hit our take profit area. So remember I said that. I was like, be careful, secure your trades. It hit take profit 1, it hit take profit 2, because I said may have the potential to reverse, and it did just that. So, remember, we'd never want to let winning trades pull back so much that we didn't secure any of our profits. So, it hit our points here. We're seeing what it's going to do at these levels before we get back into those trades. Always, if you are in a winner and it's in profit, especially ES, you have to know your different pairs. So ES goes into profit, 5-10 points, and you're looking at hitting an overall profit target of like 10 points. You want to make sure that you're moving your stop into profit accordingly. Same thing with the Dow. Once you see that moving into profit 20 points, definitely want to at least secure 10 points. So not all the time does it go completely into profit at this time. A lot of times, we're just catching those orders, but we're going through the process. This is what you would do in these situations, how you would mark up your trade. Okay, so 5-minute for gold is kind of telling us our take profit. If we're still selling, it's down here at the 32.86, 32.81 kind of area. Okay, let's look at the 1 minute. All right, 1 minute is kind of coming back up to this point where, as we can see, there was support here and price broke below that area. Now price is back here at the R8. Okay, so what do we see here as far as with gold? Let's go ahead and mark up just some of the things that we can see very clearly, such as right here being support. Okay. We have our resistance area. Again, this is the 1 minute because we were looking on, looking into getting into this trade. Right now, what time is it? Oh, it's 9:34. Let's wait and see what the market is going to do. Okay, so let's give it a couple minutes. This is a tricky time. I don't know, you guys. I wanted to, we might need to change our time so that we're not stuck in trades right in, the New York Open, and we can actually get into some trades and let it hit profit before, high impact news comes out around, 8:30, and then we have the New York Open at 9:30. So the market's not really functioning as we would like. But let's see here. Okay, so ES, we had these areas kind of mapped out here on the 5 minute, came back up here to this RSI. It's really touching this level. Still didn't break out of our box. touch the bottom of that box here. So you guys see why it's kind of, this was a preemptive trade, a trade that we got into before market gave us confirmation, just following kind of momentum there on the lower time frames, but the higher time frames are still not giving us that. And that confirmation. And if you can see on the 15-minute on the Dow, it's kind of the same thing, kind of just touch this area, bought, didn't make a higher high, didn't really make a lower low, but we knew that, so I just still want to mark these areas off and wait for price to give us that full confirmation. It looks like it's coming down here, kind of wicked us out. Could have gotten a nice entry if we were coming in for the sell up here because it came straight down. And, we had these areas marked off. We had this trade here. We were getting in this entry. So a lot of times, unless if my trade has been invalidated as far as, right now, it got wicked. I was wicked out of this trade. Time frame, New York open, it's expected. But I want to see if my analysis here that I had placed before, if it's still valid. And right now, we'll wait till this other time, this new candlestick comes in, and we'll see if price is going to continue to sell. Right now, we're seeing selling momentum, even though we're near the S0 on the 15-minute. Right now, though, for YM, for the US, for the Dow, as we can see, huge wick here. What is our wicks telling us? It's telling us that buyers were unable to take control. We kind of got, they brought it up here to 42, 463, but now it's all the way down at 42, 385. So we'll see, buyers were unable to take it higher there. We'll need our new 15-minute candle to come in to see what we're going to do here. Is this our W formation because we are near the S0 and we're looking for this break here to the upside? Or does price still have some selling, to do before it continues? You have to wait and see. These days, it's not as clear as it used to be, and that's fine. Alrighty, gold. Gold. Huge selling candle here when it got to that area, this area of support that turned into then resistance. So nice engulfing candle. Let's see here, but it is right here touching, coming down, selling. But again, using this 200 EMA as support, is just touching that area. Price is unable, it's been unable to break below this zone. Candlesticks still giving us higher highs and higher lows. So what does this tell us? We're going to continue to look for these buys if it breaks above here. But if it breaks below this level, then we're looking for sells down to this zone. So just a waiting game at this point. We kind of practice what we would be doing to look for, what would we be looking for and doing once we got that confirmation. We had our trades kind of go into, profit. It hit, ES did hit take profit 2, take profit 1 before it pulled back. So now, we're no longer looking at this this trading position tool. We're now going to be looking to get, into a new trade. We could look at, our information there, but we really want to wait. I really want to wait until this 15-minute candle kind of forms at 9:45 to give me more of a confirmation. Looks like gold is kind of trying to sell and push below those levels and come down here to 32.93, 32.90. So we have kind of a take profit there if it pushes below this support level. Right now, it is riding on this 800 EMA. Price is still making higher highs, higher lows. So we just have to be really cautious and wait for that confirmation. Alrighty, guys. Let's check the chats. I have to go. Oh, I'm going to be so late. Okay. But we have kind of a setup and what we will be looking for, whatever the market does. Any questions before I let you guys get back to your wonderful days? Thursday, Friday, we have the weekend, Monday, Tuesday, and then I will see you guys again. Thank you all for joining me. Guys, I'm all over the place. Sorry. Have a great day. Happy trading. You guys make sure we are intentional traders. Before we get into the market, we have our trades set up. You guys come into the Telegram group. We dropped a new book. If you guys are readers, we'll also drop some more information on our moving averages and, chart setups or ideas throughout the week if the market gives us, some good setup. The thing about, I used to drop a lot of trade ideas. By the time I dropped the trade idea, especially with ES, that market has moved so fast. And so that's why I just kind of like, you guys, look at gold, look at Dow, just because you guys know now, your pivot levels and things like that. And if you're trading on the 15-minute or the 5-minute, I'm just alerting like, hey, there's some big movement. We might have some points. We might have an opportunity to get into the market. Alrighty, here is the Telegram group. If you just click the link there, forward it on to your friends. We are really growing. I will see you guys next Wednesday. And then again, I'll be on Top Step TV on Wednesday as well. Happy trading, guys.